Okay, and we're live. How's it going?
What's up, guys? It's going well.
It's going good, man.
Felt like a slow week until today, news-wise.
It was a slow week news-wise until today. I didn't even realize there was news. This is the problem with him. I don't realize there was news today, and then when I saw it being down 5% or whatever it was, I was like, okay, just another day.
I was going to say the same exact thing. I
realized afterwards, yeah.
I looked at the stock and I was like down 5%, and I was like, oh, maybe there's news. The rest of my portfolio was like pretty flat or like slightly up, and I'm like, it's just HIMS. And then I go on Twitter and I'm like, oh, there actually is news.
Yeah.
And the news I expected, I would have thought HIMS would have been down like 20% off that news. So
You think that him should have been down more today because of
no. I think in the past it would have been. Any sort of GLP-1, any sort of framing of negative GLP-1 news, the stock's down 20% like 4 months ago. But the fact it wasn't today, I was just surprised based off that news, honestly. Because it just loves to react any negative news towards it. So,
do we want to jump into that news?
Yeah, sure. If you want, you can frame it if you want. Usually, you like to read the article or like the piece of news if you want to. If not, we can just hop right in.
I don't know if I have the tweet. Do you have the tweet to throw up?
Yeah. You can go to my Twitter if you want. Okay. One of my most recent posts, I posted the screenshot of the Bloomberg terminal.
Okay, let me bring it up. So this was the news today. HIMS. Let me see if I can fix this. Maybe that's a little better. HIMS dropped a couple of percentage points as a result of this post. And it says, Eli Lilly pacts bar telehealth firms from selling copycat Zepbound.
Yep.
Basically saying that Lilly will only partner with telehealth firms that agree to stop selling copycat versions of weight loss drugs, which makes a partnership with Hims and Hers unlikely. The agreement with Roe and with LifeMD that they have prohibit the selling of copycat versions of their Zepbound drugs and Novo's Wegovy, as the drugs are no longer in short supply now that the shortage is over. Hims plans to continue offering compounded semaglutide shots to a limited group of patients who require non-standard dosages, which is technically allowed under the FDA rules. So Lilly came out and issued a statement saying that we're only going to work with companies that don't sell copycat versions, or is this like some person's opinion or some speculation?
I believe it's Lilly officially like coming out and kind of like taking a stance sort of thing. It's from my understanding.
Okay. Hims teamed up with Novo in April to offer Wegovy at a discounted price to patients who use its platform. Hims and its investors have been hoping for similar agreements with Lilly, which is working with several of their competitors, Roe and LifeMD, to distribute lower-cost Zepbound. Lilly's CFO said in a conference on Tuesday, so this was pretty much it. So he said in a conference on Tuesday that the company's recent agreements with Roe and LifeMD prohibit them from selling copycats or compounded versions of Zepbound and Wegovy. Compounding pharmacies were legally allowed. Can you guys read this? Hold on.
Yeah.
Were legally allowed to make their own versions of drugs while they're in short supply, which they no longer are. Nate, you want to go through your post here?
Yeah, more of what I put there is just the fact that, and I like to take a little bit to digest. I feel like immediately everyone's like, this is crazy bullish. And I like to have that stance, but I also try and give it a little bit. So I waited a few hours trying to digest like exactly what it meant. And I kind of just noted that like, it's pretty nuts that the stock was only down overall 3% on the day for something like this, because I feel like the Lilly partnership has been the big catalyst that everyone's been talking about of like, the stock's going to move 20, 40%. If they partner, like that would help increase the moat, they become a platform. And so when we didn't partner, or like the likelihood is now, I'd say pretty low, the fact everyone's like, oh, this is crazy bullish is like, all right, you guys are just trying to frame it bullish no matter what. And so I kind of just wrote a little piece that I feel like it is relatively bullish, like long term. I think short term, it's a catalyst we're losing, which is okay. Like I'm okay with the stock being flat for another few months. But I think in terms of stock, I feel like it is a catalyst we're losing for sure. Because if that did happen, it would propel it a lot higher.
Why would it be a positive long term?
Because they're not. So what they're also doing is not foregoing selling compounded glutide, semaglutide. And so if they said, all right, we want to partner with Lilly, like we want to give up that option of us being able to sell GLP-1, it kind of just means they'll cave into the big boys. And it's sort of the same thing of like, I try to compare like the Netflix comparison of like, all right, what if they didn't partner with Warner Brothers early on? And they said, all right, you can't create Netflix originals if you want to partner with us. And if Netflix said, okay, then a lot of their current revenue now, which is their Netflix originals, would not be a part of it. And so the fact that go ahead.
Yeah, I mean, like, kind of different take. I absolutely think they're going to stop the compounded semaglutide in order to get this partnership, if that's what's required. Because right now, the specific cases, the one-off cases that they're doing it for, is not going to, like, change the trajectory of the business for them. And I think if they really want to play a long-term game from a risk perspective and from a prospects perspective, it's like you're giving up a little to get a lot over the next 5 to 10 years if you do these partnerships, right? So I don't know. It's a case-by-case basis as to like, do they want to, like, technically it's legal for them to do it, but at the same time, they're not making a massive amount of money by doing it.
Does Zava sell Lilly's drugs on their platform already?
Yes.
Interesting. Okay. Yeah, I don't think it's that big of a. I don't think it's that big of a loss for Hims, at least right now, to not get that Eli Lilly partnership. But Tevis, so what did you say? You said that you would prefer they give up the compounded semaglutide altogether for that Lilly partnership.
So without having specific numbers, it's hard to make a decision. I'm just speculating. Right. But what I'm saying is, if it's on a case-by-case basis that they can create their own dosages essentially to bypass the ruling on the shortages, it's not going to reach some critical scale. Otherwise, all of the big pharma companies are going to have an issue with it. And they're going to rock the boat with Novo as well. Like, they're stuck between a rock and a hard place as I see it, where they can do it. And it's kind of like nobody likes the fact that they're doing it, but it's allowed. But they can't scale it, because if they scale it, then it goes above the radar, right? They're not flying under the radar anymore. I think that like these partnerships are also providing some type of legal coverage for Hims as well, because your partners are not going to sue you from that perspective. And if you're thinking of it from Hims being a more diverse player that's not only working in the weight loss space over the next several years, then this is a relatively easy pill to swallow to have that partnership with Eli Lilly. Because once you have the Lilly and Novo combo, then you're pretty much set in that GLP-1 space from a legal risk perspective. Yeah, that might be oversimplifying it, but that's just very, very basic gut take.
Yeah. I guess I just look at it as Hims doesn't need Lilly. Yeah, no doubt. Like you said, Nate, would we probably see a 20 to 25% run if a Lilly partnership got announced? Sure. But I'm also curious on how this Novo partnership impacts revenue. So I guess, next quarter, we should see it, right? We should see some impact from the Novo deal.
I think so.
So
not really. You're not going to see much.
Okay. Then I'm just not sure even how much the Novo deal is going to impact revenue. So we just got to wait and see the numbers.
Yeah, I think it'll affect margins, if anything. If they were to actually affect anything. I think this also now puts Hims in the only company to be compounding GLP-1 right now. Now that LifeMed and Roe kind of bent over for Lilly. It's a way to put it. I do like that Hims took a stance, and in my opinion, from what this happened, the fact that partner with LifeMed and Roe shows that Hims had the opportunity and was Lilly probably talked to them and said, hey, we'll partner with you if you don't compound GLP-1s. And I personally like that Andrew took the stance of, okay, we don't need you guys sort of stance. It seems like.
I agree with that stance.
We already have Novo. Why do we need you?
Yeah, but like, what if Novo comes and turns around and tomorrow says, "Oh yeah, we kind of like what Lilly's doing," and like, are you gonna say no to that partnership, or are you gonna stop compounding?
I just don't think that's likely unless we see that new CEO.
As a thought experiment, right? As a thought experiment, because your answer to that question is really the answer of what do you stack rank in your mind as being the higher value item.
Right.
And if you stack rank Novo as being higher value to the long-term trajectory of Hims relative to them being able to compound on a case-by-case basis, then it's a pretty easy association to also stack rank Lilly at that same level.
I think if we want to go into further in that thought experiment, I think if the partnership starts off with an expectation from Lilly, it already is, to me, not a partnership. It's more of like a forced deal. Whereas Novo, they're allowing them to compound GLP-1s and still is partnering with them, so they can see the value in Hims. Whereas Lilly's trying to force them to not do it because they see the risk of Hims growing that revenue asset, right? And so the fact they're even making that assumption, like, hey, you guys can't do this if we want to partner with you, to me shows they're slightly worried. Whereas Novo's like, we still want to partner with you no matter what. And I prefer that take or that aspect of a partnership rather than Lilly that's just coming in and trying to bulldoze you and control you the way they want to go. If that happens with this, it'll happen with further products in the future. And then therefore Hims can't really grow the way they should, in my opinion.
Yeah.
It's just more of a tumultuous relationship rather than like an actual partnership.
I also wouldn't be surprised to see Lilly come around. Similar to the Novo approach, partnering with Hims regardless, allowing Hims to compound semaglutide and offer Eli Lilly's products, I think would benefit not only just Hims, obviously, but Eli Lilly as well, especially with this expansion to the UK. So I would not be surprised to see that happen.
Yeah, I'd rather be kind of a partnership. I'd rather be a partnership rather than like a takeover.
Yeah.
And so I'd rather them come in and be like, we want to partner with you because we see the benefit. We obviously know you're going to benefit off of our, of us, Eli Lilly. And so I'd rather them come in and actually be a partnership like Novo's doing rather than try and bulldoze their way through and create their own, force them the way they want to go.
Mm-hmm.
It's fair. I mean, look, I don't like. I agree that Hims is self-sustaining in the sense that they don't necessarily need these partnerships to continue operating. That they can do just fine without them. But I also think that Hims, being the company size that it is not necessarily in a position of leverage when it comes to these like for Novo, it was probably Hims that approached Novo to do a partnership and not the other way around, because the amount of money that Novo or Lilly is making off their drugs is like Hims' entire market cap. And so like Hims is a very, very, very small fish. And sometimes what you're going to get with those kinds of unequal leverage situations is you're going to get bullied around a little bit, but it's a net positive to expand the size of the pie altogether because it helps accelerate your business's trajectory in an inorganic way.
Yeah, I think also on that, like, what if Lilly starts seeing Novo and Hims doing well? They're going to want a piece of the pie. And
Sure.
Hims is profitable. Can Lilly really trust LifeMed and Roe? I don't know if Roe's profitable. They're private, but LifeMed's not profitable. So can they trust the sustainability of those platforms? Whereas you can know you trust Hims platform because they're profitable. They're going to be around. And so when Novo and Hims continue to do well together and continue to sell more products, I think Lilly will come around in the future.
I think it also shows that LifeMD and Roe, they need this partnership with Lilly more than Hims does, in my opinion. Like you said, Tevis, I think Hims can go without the partnership. So I'm not saying, they need that partnership to stay alive, but they might be way more inclined to accept that partnership rather than Hims. So that's why they might be willing to give up the compounded semaglutide.
Yeah, I mean, like, I think all three need a partner. Like, think of it this way, right? Like, think from a user perspective. A user comes onto the platform and they want a product that Hims doesn't have. Now, ideally, Hims would compound a product bespoke for this user, and cover their use case much better because it has no side effects and it's better all around. It's fine-tuned to them. But if you're thinking from an ecosystem perspective, having all of the options as selections in that ecosystem, I think strengthens as a whole the power of that ecosystem, right? So it's a cost benefit, I guess. Like if Hims is saying, okay, our ability to compound is more valuable than having Eli Lilly as a partner right now, then that's fine. Like I trust management's judgment on that because I don't see the numbers and I don't see what they're planning to do from their strategic roadmap perspective. But that's really the elephant in the room, right? Because I think if you had Andrew sitting here, he would agree that and he has said it on calls before that yeah, we would absolutely benefit from a Lilly partnership. Like he'd be stupid to think otherwise.
I think that's before he thought or knew that he was be forced to stop selling compounded semaglutide. I think he looked at it in the frame as the Novo partnership, where it'd be if it's that partnership, then 100% they benefit. But if Lilly comes in and says you have to lose 30% of your revenue right now, I think Andrew goes, whoa, I don't know if we want to do that right this second. Because I think semaglutide is what, 250 million they're going to make, and that's like a third of their quarterly revenue.
Where are they going to be 250 million?
From compounded semaglutide.
After Q1?
I think the guidance is 725 million, right, for the year?
Yeah, but the guidance accounted for the Q1 guidance, which included the compounded semaglutide.
Yeah, and I think if they lose 725 million, or I guess at this point it'd be like 500 million instead, it's still a lot of money they're losing just for a partnership. And we don't know how creative it is.
So hold on. What did they make from the total weight loss segment in Q1?
Let me look. Let me confirm.
Because after Q1, they can't do the compounded semaglutide because of the FDA decision. They can only do it on a case-by-case basis. And I don't think that's going to be enough to close that
That's true. Yeah.
gap. And so my thought process was, in order to close that 700 and whatever million in weight loss guidance, that they would front load it in Q1, where the bulk of it comes in Q1 because in Q1 they were able to do compounded semaglutide.
Yeah, so during the 3 months ended March 21st, our GLP-1 offerings generated 230 million in on-run revenue.
Okay, 230 million, and their guidance is for 750, something like that.
725 for the rest of the year. So they would lose 500 million.
They wouldn't lose 500 million.
Or not entirely lose it. Yeah.
That's also coming from other sources, right?
Right.
Like that's coming from liraglutide, and that's coming from their oral solution.
Right. But I think most of it is from compounded GLPs, right? I believe.
Yes.
Either way, I think if it was the same as the Novo, if the terms of the deal were the same, I think the partnership's a no-brainer. And that's why I don't think this is like ultimately the most bullish thing ever, like everyone's trying to paint it to be. Like, I think a partnership would be great in this if the same terms of Novo. But the fact that they were trying to force them down or bulldoze them the way they want to go, I think is why Andrew and team probably is like, all right, we don't want to do that.
Yeah, I can't blame Lilly's management for doing that. Like, if I was, in charge of Lilly, I would do the same thing. That's a huge threat. But I think they will come around. I think it's just a matter of time. I mean, you had Andrew, even in the last earnings call, say that they're having talks with Eli Lilly. So I think a partnership will come around. Eli Lilly, like you said, is just trying to flex their muscles, in my opinion, shut down that compounded semaglutide. But we also don't know how many customers are going to be able to get on that, personalized exception, I guess. So it's going to be a gray area. And like you said, Tevis, the partnership route is arguably better because of the litigation risk difference. You're not going to face that litigation risk. So we just have to wait and see. And we don't know the exact numbers. So
yeah, like the gap to close. So they did 250 in weight loss in Q1.
Mm-hmm. I think it's 230 in Q1.
Right. So 230 in Q1. So the gap to close is about 500 million in 3 quarters.
Yeah.
Right. 495 million in 3 quarters. It's about 165 million per quarter. So this is what I mean by them front loading that guidance.
Yeah.
Is the bulk of it was because the FDA shortage was still around. And after, in the remaining 3 quarters after the shortage, that is drastically going to fall. And we expect oral to scale, to ramp up for it. We expect liraglutide towards the back half of the year to scale to make up for it. And yeah, they'll probably come in at guidance or beat guidance. But the point being, without the shortage, they can't do it at scale. They can only do it on a personalized basis. And so this is why I'm saying it can't scale. Like, I think somebody commented saying, it can't scale is crazy. It's not crazy, because if you just look at the numbers, it shows you that it's not going to be able to scale. Right. I mean, we'll see what they come in at Q2. And if they say, hey, like, this is the GLP-1 revenue and this is oral and this is liraglutide, and you can see the split.
That would be great. I hope they do that.
Yeah.
That'd be really cool. Yeah.
I wish we got more product splits like that.
Yeah. I mean, that's the whole reason we're seeing the quarter-over-quarter decline in revenue, right? Because of the compounded semaglutide phasing out.
I would assume, I would assume that's part of it. I forget what he said in the guidance.
That's what they guided for, was a quarter-over-quarter decline. But
yeah,
it's and keep in mind, like, it is still a gray area, and I wouldn't be surprised if they do try to push the envelope a little bit of what exactly counts as a personalized, dosing or not. I think it is a matter of the non-standard dosages that constitute that rule or technicality. But yeah, it's not going to be nearly as easy as it used to be.
And the weird thing is, and Tevis, can you pull up the most recent tweet in our chat? Is Lilly has a stipulation, but 2 of their partners, LifeMed and Noom, still offer compounded GLP-1s. And so that's where I feel like it becomes even more of a gray area, or more of like they're contradicting themselves, or they're saying we're not going to partner with people that compound, but then they still are. Or maybe LifeMed still, like, they're giving them the quarter or something, and then they have to take it down. I don't know what the constitutes of the deal, but
I would have to guess is the kind of like maybe selling the rest of the inventory, or they have a certain amount of time to sell GLP-1s, and then that's it. If I had to guess, that's probably what it is.
Probably. Yeah. I just thought that was interesting.
That one sentence right here says, if Hims does end up partnering with Lilly, it would signal that the company is throwing in the towel on compounded GLP-1s, as they think the volume benefit of a branded partnership will offset lost compounded gross profit.
Which is exactly what we're talking about right now, right?
Yeah. Right. And I think management knows that it probably at this point doesn't.
Yeah.
So that's why they'll probably, like you said, Tevis, wait and see what constitutes, personalized GLP, and see if they can push the envelope. And then if it doesn't end up working out, they'll just partner. Yeah.
Like, the thing to understand here is that, like, management has a much longer lens by which to view the business growth than anybody on the outside does. And if they have a big plan for that personalized GLP-1 segment of the business scaling, and how they plan to circumvent that technicality, then they might see it's not worth it from a cost benefit analysis, and just either not go through with it ever, or just wait for a position where they have better leverage, maybe a year down the road, to see if Lilly is going to loosen some of their restrictions.
Yeah, 100%.
I think everyone's like just completely disqualifying a Hims and Lilly partnership. I don't think that's the case at all. Especially with Hims phasing out of the whole compounded GLP-1s. I think Lilly partnership is still on the table for the rest of the year. That might be an unpopular opinion, but like you said, we're phasing out of GLP-1s. So
I think it just won't be as soon as people were hoping.
Yeah.
I don't think it's off the table. Keep in mind that these companies, they issued cease and desist letters to Hims like 2 weeks before partnering. Like, the posturing versus the action sometimes are very, very drastically different.
Yeah.
And I mean, we don't know what conversations are going on behind the scenes. There could totally be conversations, because we know that Andrew has told us in the last 2 earnings calls, if you look at the transcripts, he's asked specifically about Lilly by analysts, and he says in both earnings calls that they've been in touch with Lilly, and they're constantly in touch with Lilly executives. And so we might see an article like this come out, and we might think, oh, wow, there's no chance. But this might just be a leverage thing, or a tactical repositioning while they're even doing talks in the background. So, dude, what do you mean? Novo sent them a legal letter to stop compounding.
Yep.
And then they literally partnered with them 2 weeks later.
I think the I don't know if you guys saw. I think it was earlier this week or maybe last week.
And then this is also why like Manuel sold the stock, who was like the OG HIMS investor, is because he literally thought that a lawsuit was coming from Novo because Novo basically sent them this letter.
Yeah, which if that did happen, the stock would be in the low teens. So
yeah.
I think on that though, on the Novo partnership, did you guys see? I think it was earlier this week or maybe late last week that Kerr Schultz, the guy that joined the HIMS board, is in possible one of the front runnings to be the new CEO of Novo Nordisk.
No, I didn't see that.
Yeah, so Kerr Schultz, he's the one that joined the board. He was at Novo for 25 years as a COO. People all thought he was going to be the CEO at Novo and wasn't, and so he left. But I guess apparently when they're looking for a new CEO right now, and he's one of the top candidates. I saw it in HIMS house, and they said it's a rumor, so like who knows? But that could be interesting and a pretty cool thought experiment. And he's been on the board for HIMS for like I think a year now. And so if he became CEO at Novo, like that would be huge.
Yeah.
Because he knows what Andrew's goal is. Andrew and him probably are good, have a good relationship now. I thought that was a cool thing to talk about because, yeah, I think I saw early this week or late last week. I forget. Hopefully, someone in the chat can correct me. But
yeah, I think we're not just going to see Lilly and Novo, lose to HIMS or HIMS lose to Novo and Lilly. I think both will benefit. HIMS is going to be the platform that all these drug makers want to be on, and that's the future for HIMS, in my opinion. It's the platform. So it's going to benefit both parties. It's going to benefit these pharma companies dramatically to partner with HIMS.
For sure.
So if that's the case, then why is this short interest still climbing?
Because HIMS is just a boner pill company, Tevis.
So the short data came out today, and the stock price as of the last snapshot on May 15th relative to May 30th, which is this latest snapshot. I mean, the stock price is a little lower, I guess. 56, 57-ish dollars. And then the short interest is about 2% lower, still 32% of the float, according to Fintel. But like you have short interest rising in conjunction with price rising, which is the interesting part.
I just, at this point, I feel like it's been a discussion we've had for months, and I still just can't wrap my brain around it. Like before the Novo deal, I feel like, all right, the lawsuit risk is definitely possible. Now I'm just like, I just feel like I don't know what's going on. Like I don't understand. And maybe I'm missing something, or maybe I'm being dumb, but I don't know what could possibly be a reason to short a company that has like a rule of 40 of 120. Like what are we doing shorting that? I don't understand. And one of the fastest growing profitable companies in the entire stock market. Like I don't get it.
What do you think it is, Tevis?
Hey man, beats me. I mean, I'm still like I sold cash secured puts on HIMS today, and I sold cash secured puts on HIMS on yesterday too. Jeez, was it yesterday? Yeah, it must have been yesterday. And yeah, it was because it was Monday. So like, I'm very much confused by the short interest. I'll take it, but especially like with the acquisitions that they're doing with Tribe Labs and others, and how they plan on integrating it. I get it. Like the stock is up 130% or something year to date, which is absolutely insane. So, I mean, they might be shorting, thinking that it's going to revert to a normal range. But at the same time, they've been increasing like shorts have been increasing their position on HIMS all throughout the run up. So as HIMS has been, from a risk perspective, a little bit, de-risked from these lawsuits and from their execution and their triple-digit growth rates that they keep putting up. Now the acquisition of Zava and Tribe Labs and the entire ecosystem side of the business, the data side of the business, which I feel that many people just still are not understanding or giving them the credit for. And so the short interest makes very little sense to me.
Yeah. Especially like of all times right now where, like you just said, you have the Zava acquisition just go through, or it's going to be completed in the second half of the year or whatever. And then the dramatic revenue boost I think we'll see from testosterone and menopause. It's just, now would be a horrible, horrible time to be shorting HIMS. Not to mention, even without those two new products and international expansion getting started, you had over 100% year-over-year revenue growth last quarter. I just don't know what person in the right mind looks at these numbers and these catalysts for the rest of the year and say, yeah, let's open a short in this company. And Kelly, I don't know if she's still in the chat, but I think she made a post on X. She's like, which stock is the most understood? Wait, which stock is the most misunderstood in the market right now? I commented HIMS, no doubt. And Roy, who couldn't join us today, he was like, no, I strongly disagree. I think people understand HIMS for what it is. I disagree. I don't think the short interest would be this high if people truly understood the business. And what is it? Over 32% short interest of the
33%. Yeah.
33.
Yeah.
It's ridiculous. So I don't think HIMS is understood. I think HIMS is really misunderstood as a business.
Yeah, I think HIMS potential is absolutely misunderstood as to where the business can go and what the moat truly is. I think HIMS, from a product perspective or user perspective, is more well understood, but people over-index on the weight loss and under-index on everything else.
And that's why I was surprised today with any sort of weight loss news that they framed as negative. The fact it wasn't down 25%. Usually shorts pile in there. I don't even understand. And even like let's say next quarter, maybe they're shorting because HIMS is showing weak revenue guidance. Their quarter-over-quarter decline, year-over-year, it's not going to be 120%. It's going to be, I just did the math, 72%. Oof, really slow growth. And the rule of 40 is still going to be 85. Like I don't get it. It's still has a rule of 40 higher than Palantir, higher than most SaaS companies, and it's still being shorted 33%. Like I don't.
Right. Is this the comment you're referring to? That you're responding to?
No, I'm just saying in general that maybe the bear case is that overall revenue is slowing down year over year.
Right.
And that's why they're sticking with their short, because they think it's going to continue being that way. But even in that frame, it's still growing 70%. So it's like, what do you, okay, like, I don't get it. They're still trading at 7 price to sales, growing 70%. Cool. It's a great short.
They can't stay triple digits growth forever. Like it would just be,
right.
I mean, they're what, like a $15 billion market cap company now? If they stayed triple digit growth for like, the next 2 years, 3, like it's completely unfeasible to have that expectation on the business. Like they're going to slow down. The question then is, where do they find other vectors of growth? And I think international expansion is a perfectly good avenue for them to do that, not to mention all the other products that they're going to be launching. And so, like, I'm not too concerned about that piece.
Yeah, and even if, like, let's say they just meet their guidance of 540 million, like I said, it's still 72% growth.
Yep. I mean, not even to mention the 2030 guidance they sandbagged.
Right.
So that was a 22% compounded annual growth rate. I think that's worst case scenario in my opinion. We can argue about that. I mean, that's way lower than where we're at now, but I think we'll crush that 2030 guidance. I think we'll see a CAGR way above the 22%.
Yeah, it doesn't really make sense to me. And I keep trying to think of reasons as to why. And to the comment of their core business is shrinking. Like, do you think management doesn't know that? Do you think they didn't try and hit the ground running with GLP-1 because they saw the market fit and they saw the opportunity, and so they ran with the marketing with GLP-1, and that it will eventually become a core part of their business? Like, I don't think people say, "Oh, core business is growing slowing." It's like, yes, because the company's focusing on marketing GLP-1 and they're pushing GLP-1 because they see the opportunity. Like, I don't understand that argument. Management's going to find the different revenue generating assets, and so they'll continue acquiring different products when they see the right time.
I mean, look, man, like that's pretty much the argument that anyone can use for any high growing company, right? And like in some cases, it'll prove to be true that the growth is actually going to plateau and then start to decline in terms of the growth rate.
Yeah.
And in some cases, they're going to continue to, do it. Like my objection when people bring up Palantir is like, all right, well, the first quarter that growth rate doesn't accelerate, the stock is going to take a 30% haircut. And I've been saying that for like the last $70 that this thing's appreciated, right? And so, and like you can say it for everything, right?
Right.
But I think the positive signs are there. Like international expansion, I think is going to be big. I think they should talk about it in the next earnings call as to how they plan to integrate Zava into their wider ecosystem and how they plan to use it as a foothold to expand into Europe in a more concrete way. Testosterone and the new menopause products, I think, are going to be good that are coming towards the end of this year. Like, and yeah.
Yeah, I think the Zava deal, man, that'll be, yeah. I'm more and more excited to hear about it.
What do you guys think they paid for Zava?
Oh man, I think the more I see people talk about it and speculate, I think under 300 million is my hope.
Mm-hmm.
That'd be amazing in my opinion.
Yeah, they still have $1 billion in cash.
Yeah.
Like they still will probably be able to acquire another 2 or 3 companies, and still have 400 million left over.
Shorts doubled down since Zava acquisition news and added over $30 million worth of very deep in the money calls. Are they bearish on the acquisition?
I wouldn't say double down. The short interest is still around the same as what it's always been.
Well, we don't know, right? Because May 30th is our last official short interest from the NASDAQ. I mean, you can use Ortex and other tools to see more recent, but Zava acquisition was after that.
When was that? Was it like June? It was like last Monday or something, last Tuesday?
Yeah, like after May 30th. So the next report we're going to see after the Zava news has been like priced in, whether the short interest keeps rising or whether it actually falls.
I thought it was interesting how we saw that huge spike at open whenever the Zava acquisition was announced, and then it just
was crazy.
No, dude, it's been spiking at open every single day. Like there's massive volatility at open every single day, and you see this thing be completely unpredictable every morning. Have you noticed that?
Yeah, I mean, that acquisition was like, it was up 25%, and then within like 5 minutes down 3%.
Look, every single morning at open, it like does some crazy shit. Like open, it went up to 58 and then dropped for the rest of the day. Open, massive drop. Open, massive rise. Like there's some massive volatility every morning when it opens.
And that's beautiful for covered call selling. I sold right at open on Monday, like $70 strikes, and they're already up 50%.
Yeah, and the thing is, if you knew which direction it was going at open, because like half the days it like opens big red, half the days it opens big green.
Yeah, I love the volatility. It's so great for option selling.
So $70 strikes.
Yeah, I got $70 strikes for this Friday.
I got the same.
I wrote some cash secured puts at 50. I have 50s for this Friday.
Oh, those are solid.
And then I wrote 50s for June 27th as well. Super like small portion of my cash because it can absolutely be like $20 by June 27th. Or it could be at $80 knowing HIMS. So we'll see how that goes. But I got about $1.55 in premium on the Friday 50s, and I got about $2 in premium on the.
Jeez, like a 4% return for 2 weeks or 3 weeks. That's nice.
Yeah, exactly.
It's so insane.
I mean, yeah, that's volatility for you. But either way, I'm pretty happy with it. Like, if I get assigned at 50 and I don't roll, which is like a big if, but even if I do, then I'm fine. That's how it happened last time, right? I averaged all the way down and then I let it go through covered calls. So totally fine.
Nice.
I do not, I have not, and I will not write covered calls on this thing though, because like that's the scary part to me. Cash secured puts
burned so many times.
Cash secured puts, I'll be aggressive. Like I have written cash secured puts at the money for HIMS, and it's been fine. But covered calls is the scary part.
Yeah, I'm an idiot probably for doing it, but it's fun.
I think it's like we've been flat for the month. I think we're down like 2%. We're pretty
Yeah.
good.
Yeah, for the first time in a month, it's like actually flat rather than being up or down 100%.
But
It's
with this
good.
high short interest, like that's got to be hurting their pockets. You know what I mean? I feel like we have to see a move in some direction soon.
Well, it's good that it's consolidating a base in the 50s, and it's just accumulating more and more buyers in the $50 range. Like it's not like a short-lived like sugar rush, up to the 50s like it was last time. Like we went up to 73 and then we've like lost it all in a matter of a week. And so I think like forming a higher base is just taking a breather for the next leg up. Also, not to mention that it's forming like the biggest freaking cup and handle ever on the daily every day that it consolidates. So, but I agree with you, Elijah. Like it will go back to being very volatile. It's just a matter of when.
Yeah, and the shorts are paying for that interest, every week or whatever it is. So the longer that it just sits here and consolidates and the buying pressure is there, like the more they're hurting and the more they have, like Elijah said, the move has to happen at some point, whether it's they get burned or they make money.
Yeah.
What do you guys think about the valuation right now?
I think it's still, I don't think it's extremely undervalued like it was like, a month ago, but I think it's still a little undervalued.
Yeah. I definitely don't think it's overvalued. Let me put it that way.
Yeah, I wouldn't pay anything over $70 for it personally. Like I wouldn't want to. I might still start. I'm gonna wait a little bit, see what happens over the next couple of weeks, but I'll probably start buying more shares. But if it hits over 70, I probably won't buy shares for a long time, unless the growth rate continues to be crazy.
Yeah.
85 fair value. Oh yeah, that's actually a good call. Oh, go ahead.
I was just going to jump to this question. What's the moat for the HIMS business? Can others replicate the business? Is there anything proprietary?
No, there's no moat. Obviously, I'm kidding. The moat is the personalization. That is 100% the moat in HIMS business, in my opinion. And like you said earlier, you touched on it very briefly. The data that they're getting from these customers is going to be immensely valuable in the future. So as time goes on and they get more and more data and they leverage that data to offer more and more personalized solutions, then you got the at-home testing kits that are coming soon. So if anything, I think we're going to see deeper personalization as time goes on for HIMS, and that's the moat, in my opinion.
Yeah, I think them having a platform essentially where they can add more products in that ecosystem and then deeply personalize all those products. It's a virtuous cycle where the personalization is going to lead to less churn, and the less churn is going to lead to more data, and more data is going to lead to more personalization, and so on and so forth. And ultimately, like AI, I think is the other layer that you have to add on top, where you now have all of this data and you have detailed insights as well. So June, just to answer your question, back in November or December, they bought this company called Tribe Labs, And basically what they do is they do at-home testing for blood samples. So you can do like I think it's like a pinprick of your finger and send that in. And then based on your blood markers, they can personalize a solution for you. And then you can imagine, like, okay, you have this company that can do that, and then you have a generic thing in the pharmacy. Like, you're never going to go to the generic thing ever, because all of a sudden, if you had side effects, or if you had some, other symptoms, or if you merge this with another offering altogether for a personalized solution for you, like, it's a product that's bespoke to you. So I don't think you're gonna ever leave. And then on his side, like, collect all that data, and they can leverage that data to say, okay, how many people are there that also fall into this category, and do we want to create more products for those people? And that's how they came up with the 4-in-1 or the 5-in-1 pill, is they found that a large portion of their users fell into the intersection of these different categories, and they're like, okay, well, let's just productize this essentially and release it as a 4-in-1.
Yeah, I think, the moat question is always funny to me. Like, what do you mean, what's the moat? Can you find any other telehealth company that is profitable, has 2.4 million members, has $1 billion in cash, is growing 100%? Like, the moat question to me is just someone that never understands the business and is trying to, like, poke fun at a company. But I do think the real moat is, like you guys kind of touched on, but the 2 words for is vertical integration, right? Like, Amazon has the users, but they don't have the peptide facility or the at-home test kit. Other, Lilly and Novo have the data, but they don't have the platform. And so all of that combined is the vertical integration of HIMSS, and I think that's the moat, right?
Yep.
And so, I think it's just, for end to end, the entire process is their moat, and they're slowly building it up. But I think it's funny when people think, like, you can just copy the brand and 2.4 million users, like, tomorrow. It's like, okay, do you want Amazon's giving you your ED pills? You probably don't. You just want your toilet paper and your dog food to get home quick. Like, it's a different company entirely.
But people just always want to bring up the moat argument. That's just such a cheesy way out. HIMSS is such a young company, and the moat's going to get deeper and deeper as time goes on. Just like I say, Robinhood has no moat. Or, like, how is Shopify going to compete against Amazon? Like, the whole moat story is just, it gets proven wrong time and time again.
Yeah.
It's like Paul Gardner said, that's not a moat. If you're on a personalized treatment, right, and it's customized to you, customized dose, and you're getting better results and less side effects, and all your information is already in the HIMSS platform, it's tailored to you as an individual, it is highly, highly unlikely you go anywhere else. So to say that's not a moat is just, it's erroneous in all accounts.
Plus it's also, like, cheaper for people, right? Because I can do it as a subscription, as opposed to paying large, like for GLP-1s, for example, or even the oral weight loss solution. Like, as a subscription, it's more manageable for me on a daily, like, cash flow perspective, monthly cash flow from my household, as opposed to going and paying hundreds of dollars, for this.
Right. Yeah, I think moat's thrown around a lot. Like, I feel like it's been thrown around a lot the past 5 or 10 years, because everyone thinks anyone that has billions in cash could just copy whatever business it is, like Hood. It's like, oh, Schwab could just build Hood. It's like, all right, cool. That's not how that works. User experience and the integration of it all is important. And the brand is not something you can just copy in a day.
Yeah, I do think there is also something about, speed to market as well. Can somebody come out with this and also be successful? Absolutely. Right?
I agree. Yeah.
Can Amazon or whomever copy the exact HIMSS playbook and also be successful? Yes, the market is big enough for all of these players, but can they do it in such a way that completely crushes HIMSS growth prospects? Unlikely, right? Because they have speed to market, they already have product market fit, they already have a flywheel going, they already have this virtuous cycle, and they already have all these, like, marketing efforts. They're already establishing themselves as a brand, and so it's still early days, I think, with a lot of the stuff that HIMSS is doing, and they're in hyper growth mode, right? So not all businesses live and die by the moat. At some point, yes, they do. But like AI, for example, right? You're going to say, well, what's ChatGPT's moat? And we could argue this for like 10 hours.
Yeah.
And we might come to a conclusion that at the end of the 10 hours, there is no moat. But both ChatGPT and Gemini and all the other ones are going to grow so fast because AI as a vertical, as a space, is also growing fast. And so the differentiation or the need to differentiate is not as prominent in an area as opposed to an area that's already, stagnating, for example.
Right. Yeah. It's not a winner take all market, right? The market's continuing to grow, and the look and the need for personalizing your health is continuing to grow. And so, yes, Amazon can come in and kind of build a similar process, but it's not going to just uproot Hims' entire business model and Hims is going to be at $0. Like that's just not how business works. Like people that think having a cop-built business means they're going to be bankrupt next year it's still laughable to me. Like it's not how business works, guys.
Right. Okay. I'll let you take this question, Nate. Is selling a bad idea?
For a stock that has 33% interest and is under $20 billion market cap, yes. Am I still doing it because I'm an addict? Yes.
Yeah. Like it's pretty. So the reason why I feel more comfortable selling cash secured puts as opposed to covered calls is because if I get hit on the cash secured puts, I'm happy to hold him stock.
Yep.
But if I get hit on the covered calls, then I have to let go of my existing HIMS holdings.
Or just roll indefinitely until you're retired.
or just deal with the headache of rolling.
Yeah.
But you want to be able to capitalize on the volatility so that you can collect higher premiums. It's just that when you do it through covered calls, like you have to do it with the
expectation is going to be sold at that price, right? Like
exactly.
And that's when there's only a few times that I'm not going to say recommend because it's not financial advice, but where it makes most sense where it runs up 30% a day because those $90, $95 strikes when the stock is $60 are up so much that selling them for that Friday, if you expect another 45% move that week and you make 60% in a week, like you should be happy making 60% in a week. That's like what the S&P returns in 5 years. And so, you kind of play your cover calls correctly. It makes sense. But weeks like this where like it's been flat for a month and could pop any moment, it's stupid of me to sell that close to the money. But when it runs a lot and you sell way out of the money, I think it makes sense and it can be fruitful.
It's actually funny because Elijah was one of the people this week, but I saw a couple of people in my curated feed posting their year-to-date returns, and they're like, really blessed that I have XYZ returns. Like I think Elijah posted his and he's like 80% up or something year to date. There's another person that also invests in HIMS and he was like up, 40 something percent. Like, my portfolio is up like 26, 27% year to date. And I was laughing because in the back of my mind, I was like, yeah, it's all because you guys own a stock that is up 130% year to date.
Yeah.
And it'll drag your entire portfolio up. And the crazy part is that it is so untethered from the normal expectations of the rest of the market of the people who just buy the index. It's wild.
Yeah, I mean, for me, I bought Palantir and him or SoFi in 2020, and so in 2022 I was down 50% in my portfolio, whereas most people in the S&P were probably only down 15%.
Yeah.
I ended up making a lot more money because I held, but just like you said, it tethers your portfolio up, but it also can crush it if you don't play the games right. So,
yeah.
I mean, we just saw HIMS during that short squeeze went from like 72 down to 25.
That was insane, dude.
Like, holy shit.
That was only 3 months ago. Like, or 4 months ago.
I mean, and now we're back above 50. I mean, dude, you have to have a stomach of iron to hold this stock.
You got balls of steel, that's for sure.
Yep. Hey, pull up MR's comment. Elijah's being SP 500, he says.
Uh-oh.
So this guy put a comment on my video. I made a video that says how I outperformed the SP 500. Bro goes on to make this argument about bro's only been investing for 2 years and he wants to make a video how he's beating the SP 500. I didn't know time was relevant for beating an index or this and that. I wish I could say I've beaten it for longer. I plan to keep beating the index, but I mean, Jesus Christ.
Yeah, I mean, you just add 2 words in 2025, and that's it.
Yeah, maybe I need to do a better job with my video titles. I don't know, investing for 2 years was a crime.
I mean, look, man, we could end up 2025 and HIMS could be at $5, and you would have to make a video being like, I underperformed the S&P 500 by a lot.
I'm 19. I've only been able to legally invest for 2 years. So,
is it 17 in the US where you can invest?
No, 18. But I'm about to turn 20. So,
I should zero.
I'll see you in Mexico, Matt.
Yeah, Matt is Matt's just upset because you didn't want to go to Mexico. Okay, what is that? It for the HIMS related news?
I mean, yeah, there's no other news. I think a conversation we could have, but I don't know when you want to end, is like TRT and menopause related products.
I think let's save that for next week.
For sure.
It's weird, man, because like some weeks HIMS is gonna have like 20 pieces of news, and then some weeks it just doesn't have everything. But
yeah, cool. You want to end it there?
All right. Well, let's end it there. Thank you, everybody, so much for watching, and we will see you next week. We'll let you know on what time. Anything that you guys want to add?
Nope, nothing on my end. Appreciate it. It was fun.
Thank you. See ya.
See everyone.